All right, all right. Good afternoon. Happy Monday to you guys. We're going to get started here in a second. Give folks a chance to jump on for Money Mondays with Engage Wealth. Very excited to connect with you guys and do something a little different from our norm, and engagement and talking all things financial and retirement and just really looking forward to doing some new things here. So we'll take a second, give folks a chance to jump on and get their lunch together. I know it's lunchtime, so things will be, want to take a little break, uh, while folks are getting their lunch together, maybe getting a chance to kind of pull away from the office or from the desk or wherever you are, kind of break away for a quick second, just to talk a little bit of money, and all things money. I mean, I'll be the first to say I'm not, I don't know everything about money, but I do think it's important for us to start having more conversations on the topic, particularly with folks who are in the industry and have lots of experience in that. And so yeah, we'll take a second. We're going to get set up here also on social media, and I think we'll have some folks joining us who will have some real time questions and kind of just off the cuff. I always tell folks, I was like, if I don't know it, more than likely I can connect with someone who does know the answer. And so I think more importantly than anything else, it's important for us to start having more conversations around money, and we can get away from the water cooler, the office water cooler financial advisory, right? And so, one guy or someone in the office says, oh, this is what I'm doing for, my kids' college education, or this is what I did, for estate planning for our family, or this is what stocks I'm invested in, and all these different things. And we take it as golden rule, and we find ourselves involved in something that we probably shouldn't have gotten invested in, probably shouldn't have gotten involved in. But we want to make sure that things are beginning to shape up, particularly around your personal financial goals, your personal retirement goals, your goals for your family, and having some conversations around these things. And so I've had folks throughout our Dreammakers Network say often, hey, we need to do something live. We need to begin to kind of mass market conversations around money and these topics that we have, and kind of these in our own little quarters with individuals and things like, and folks who we know and love, but to begin the process of having real conversations on retirement, on financial concerns, on budgeting, on investing, on business development and entrepreneurship, the whole nine. And so this is something that is kind of near and dear, and it's important to me. And so, it's just time. It's just time. It's just time for us to begin to have these types of conversations and open it up to people who may want to jump in and ask questions real time. And then, at the same time, though, please feel free to go to our website, either of our websites. You can go to engage-wealth.com to learn more about our company and schedule a time for a one-on-one conversation. If you'd like to maybe not ask, very personal needs and questions on this live platform, definitely we can schedule free consultation to do that. At the same time, go to our Dreammakers Network, dreammakersnetwork.org, where you can learn more about some of the activities and things we've done in the community. And it's another way where you can also sign up to join the network, as well as schedule kind of a one-on-one engagement as well, to talk through what you're working on, not just even with the finances, but with the Dreammakers Network. This also encompasses your community objectives, things that you're working on in the community you'd like to really bring more awareness to, get more support, access resources that you may not have, particularly if you're running a ministry or a nonprofit, or engagements that you have in the community. Let us know. We'd love to learn more about that and participate with you and share and spread the word about what you're doing and how we can be supportive of that as well. Well, we'll get started. See, we have some folks join on, and thank you so much for connecting with us. For those of you who don't know me and it's like, who is this guy and his orange and what's going on here? I'm Byron Deese, founder and CEO of Engage Wealth and of the Dream Makers Network. And Engage Wealth, we're a wealth management company providing financial services for individuals and organizations. I'll say our business is really three-pronged, if you will. There are really three pillars to our company. Well, we provide exit planning consulting services for business owners who are also trying to figure out how to retire. They've built a business at some point and trying to figure out, yes, I have a 401k and I'm making contributions to that and I have some savings here and there, but what about my business? How do I begin to include the shares that I have in my business as part of an asset in my portfolio? And how do I sell a company for the highest multiple? And what do I need to do with de-risk the business and make sure it's attractive to an investor and all of that jazz? So exit planning consulting is something that we offer for our clients. I'm a certified exit planning advisor as well. We also provide employee benefits. So we're 401k, group life, group health, deferred compensation, buy-sell agreements for investors and partners, and just kind of all of the different things from executive compensation that would be involved in employee benefits and helping that business owner then provide the right type of, bells and whistles for the employees who are, love the work that they're doing there. But we are in a very competitive environment now, and businesses are always trying to find ways to attract the best people to their companies. And so, it's one thing it's always important to make sure that you're providing value to those key players on your company who may not be owners, may not be owners of that business. And people headhunters are knocking on their door every day. You may not know it, but that is a reality, particularly in this market, right? This market where this is a different economy. This is a different workplace environment. And folks are looking for the best opportunities as they particularly begin to strategize around growing their business and growing their career and making sure that they're maximizing their overall financial plan and retirement portfolio. And I would say, lastly, that third pillar of our company is retirement planning. Everyday retirement planning for employees, for families, for individuals who are just trying to figure out, hey, am I doing the right things to save for retirement? Because one day I'd love to just have lifetime passive income, not have to show up to work every day. If I want to start a business, cool. If I want to start an organization and do some community work, great. But there needs to be a component of lifetime passive income that is just taking care of the day-to-day expenses, household related expenses for the family. And it would even be better if it could provide some discretionary in that as well, where you can begin to kind of map out what your retirement life would look like after expenses. If there's more to travel, if there's more to be a bit more of a pillar in the community by investing and supporting causes that you love and want to see expand. These conversations as well, and I think that for the purposes of this particular Money Mondays call, we want to make sure that is kind of the focus, that we're talking more about retirement planning for the average everyday person who's just trying to figure out, what do I need to do? Am I doing enough right now? I'm actually a part of some things. I'm investing in some stuff. I'm contributing to this and that, but is this the right thing to do? And I'm here to tell you just off the jump that this is a very specific and personal objective to answer that question. That question is answered by you beginning to unpack what your future looks like. What are the things that you want to do? What are the things that matter to you? What's important to you? How do you see yourself in the future in terms of how you spend your time? If you didn't have to go to work every day, how would you spend your time? Would you sit back and watch the soap operas all day and just wake up whenever you want to wake up, go to bed whenever you want to go to bed? Or is there something else you've always wanted to do, but you just really just don't have the time? You're at work, you're doing all these other things, you're raising kids, you're spending time, taking care of parents, all the things that have been identified as realistically your responsibilities. But there will be a time, if God continues to bless you with life and strength, you will have a time where it will be your time. You would have retired from your job, whether that's sooner or later. And building an actual retirement portfolio plays a big role in if that's going to happen sooner or later. So, but I will tell you though, I think a lot of times we make that, we assume that that amount of money to retire for the rest of our life is more than what it really should be or needs to be. And I want to make sure that we begin and kind of create an ongoing, open conversation around this, to be able to, chip away at some of those barriers in your thoughts around, should I save? Should I not save? Should I increase my contribution? Should I pay off a house? Should I do all these things to try to get me closer to some type of normal feeling around retirement? I've had conversations with folks after meeting them for the first time, and we talk through their financial life and their current net worth and where they've saved and do they have assets and all the whole nine. And I can tell you, there are a host of people who have done a great job of saving, but they have high anxiety around starting the retirement, having a retirement conversation, let alone actually, retiring and leaving from the job and beginning to take income on from all that they've saved and invested. And I just think that it is so important to have a clear-eyed conversation around these things in a way that makes sense for your day-to-day life, for the things that matter to you, to your expenses and household related expenses and things like that, and the people who depend on you and all that jazz. And so I am just really excited to begin these types of conversations. I'm happy that you've chosen to join in with us here. If you're watching live or if you're going to watch this later, definitely appreciate you taking some time to join in, and please feel free to connect with us if you have any questions, to be able to click the link to our Google Meet link where you can jump on and ask any real-time questions. We're happy to do that as well. We want to make this an open forum, open conversation. But again, if you want to do one-on-one, feel free to go to our website and just schedule a one-on-one meeting for us. And so looking forward to having this conversation with all of you guys. So again, I'm Byron Deese and with the DreamX Network and Engage Wealth. And, when we begin the conversation around how to build a multi-million-dollar retirement asset portfolio, and if that is important, but I think it's important to at least begin the process of talking about, how do we get there? Is that even a realistic goal? And after going through the conversation, then beginning to say, well, is that something I should even begin to pursue? And so, well, maybe Byron, I may not have a need for a multi-million-dollar retirement portfolio, but hey, I'd love to have $1 million portfolio, or I'd love to have, a couple $100,000 in my overall retirement portfolio. But I want us to have a conversation around expanding your thoughts about what's possible, and then begin the steps of building and preparing and strategizing on how you can accomplish this on your current cash flow and income, and what are the next steps to kind of build from that. And so I am a big believer in diversification. But I like to talk about diversification from an asset allocation perspective as well as risk management perspective. And so for those of you who may even be familiar with the term modern portfolio theory, which is kind of the model for asset diversification and making sure you have a mixture of asset classes in your portfolio, whether it be a retirement portfolio or a stock portfolio or just your overall investments. And so and if you're having that conversation, say with a retirement advisor, they may talk to you a little bit more about your 401k plan and how you're investing there, what percentage of your investments are in aggressive growth, mutual funds, or maybe even stocks directly that has an expectation of double-digit returns. What percentage is in more of a moderate allocation or mid-cap, or different types of funds that can give you maybe a 10% rate of return or above 5%. How much is this invested in small caps? Just really looking at all the various asset classes that are available to you in those type of accounts. But one thing I think is important, a conversation that we definitely should have when we talk about asset allocation, diversification, risk management, is how many of the asset classes are you in that are completely in separate accounts? So for instance, if all of your money is in a 401k plan, then that's one account. You can diversify in that one account, but if you don't have any additional savings, particularly say in the bank, or if you don't have real estate, or if you don't own another business or have other means of assets and investments working for you in addition to the 401k or the 403b plan that you have through your employer, then you really, you may be able to diversify within that one account. But from an asset allocation and risk management perspective, all your eggs are in that basket. So we want to make sure that when we talk about diversification, asset allocation, we're also talking about multiple asset classes with different accounts. Many families that we have may also have 529 plans for the kids. So they're saving for college education, which those savings has a specific goal, and it's different from your retirement goal. Some may have their own individual IRA, which is separate from your 401k plan. So is there a need to diversify how that money is invested versus your 401k plan? And one thing that we do with all of our clients is make sure that every client has access and completes a risk tolerance questionnaire. That risk tolerance questionnaire allows each employee, particularly each client and each individual, to begin to understand their experience with investing. How long have they had access to investment services and savings? How long have they participated in it? Asking specific questions around how would you feel if the markets were volatile and majority of your dollars were in the markets and there was a sell-off, like it's really giving you a chance to kind of separate yourself from everyone else to create a unique investment policy for your assets. That is an extremely important process that everyone should go through as they're beginning this process, because as we know, jobs change, the economy changes, investments change depending on what's going on in the economy and global economics and geopolitical politics and the whole nine. So there's several factors that could shift and make those underlying investments take a turn. So you want to be in a position where you have built your own investment policy, where now you can identify these are the type of investments and strategy that I should have, which may be different from your husband, maybe different from your wife, maybe different from your employees and other and colleagues. So it gives you your own unique approach. And so at that point, the one thing I always like to do is, if we take a circle and just cut it into fours, and now we kind of have, this represents our entire investment pie, and we break it into fours. This is the beginning of being able to at least begin to think about how we should approach asset allocation. So for instance, if we have on the left, right side, or on the top, we have aggressive growth. And I always like to, and even regardless if I'm talking to a business owner or an employee of that company or just an average everyday person, I always like to talk about aggressive growth and the potential of the rate of return from a 25% rate of return or more. That you're in a position where you're investing in things that can give you definitely double-digit return, but 25% rate of return or more. So it really carves out. There are only certain types of investments that can be in this asset class, because if you have CDs in that asset class, that's not the right investment, because you're not going to receive 25% rate of return or more, at least not in this economy. Maybe back in, in the 70s, you may be able to have done that in a CD, but not in today's environment. But you want to be able to know what type of investments would belong in that type of asset class. So you're talking about businesses, you're talking about real estate, you're talking about stocks, you're talking about aggressive growth funds in terms of an aggressive allocation in a mutual fund. Those small cap funds, those type of investments would belong in that aggressive asset class, which gives you that realistic 25% rate of return or more. And then we have our moderate allocation, which is essentially, again, these are my terms when I say between 25 and 10%. So what investments could give me access to 25 to 10% rate of return? We're still in the double-digit growth allocation of your portfolio. And we're talking about mutual funds, we're talking about stocks. All those same investments are there, but at that point, you are in a position to be able to decide, especially on the aggressive side, you may be a bit more hands-on with those investments, and you're probably not outsourcing that to an investment advisor to manage, because these are investments that you understand, particularly if you're talking about real estate, and it's the real estate market that and understand, and you've bringing in those rentals. If it's a short-term rental, if it's a mid-term rentals, those high cash flow producing assets in that asset allocation. Also if you're in stocks, so on that aggressive side, you're still working with corporations that and understand. Maybe you spend your money there. These are stocks that every month you can look at your bank account and show that this is where you spend your money. If they're publicly traded, take a look and see what the stock price looks like. Are they close to all-time highs or all-time lows? Like, where are you in terms of understanding what the stock position is for those publicly traded companies where you spend your money and you have an idea and an understanding of where that company's stock is trading? Is it something that you should buy? Is it a value right now? Did you miss the boat because they're trading at all-time highs right now, and the trends around growth may not be there for them? So having that type of conversation and relative to those underlying investments in your aggressive growth allocation is important. And again, the same thing goes for the moderate allocation, where you could very well at that point bring on an investment advisor who can give you some strategies around, and they may take on just as a fiduciary. But now they understand your investment objective, and they'll take you through the same type of approach of a risk tolerance questionnaire, understanding your background, understanding your risk tolerance, what you're willing to take on, and then begin a mix of investments that can provide you a double-digit return based on historical averages, but making sure it's in a position where I always want to make sure that clients understand where their money is being invested. A lot of times you have conversation with folks and say, okay, wow, like I see you're invested. You told me you had a Schwab account or a Fidelity account, or you have your 401k. How are you invested? I said, you know what? I just, somebody's managing that money for me. I don't really know, but I trust what they're doing. Looks like I'm doing pretty good. We did, 18% last year. So I think we're doing on the right path. And in up markets, that's usually kind of the conversation. But when we have big, sell-offs, if we're in a bear market, then folks are really concerned because they're living in the negative double digits. I remember back during the credit crisis. Oh my God! I mean, not only that wasn't even a period of volatility. It was just every day we were just going further and further and further into the abyss. And so it was like we were looking at good days as, oh, we didn't lose as much money today as we did yesterday. So there are those moments in the markets where sell-offs are just very real. And for individual investors, it's important to make sure that your portfolio is prepared for any type of investment or economic market, that those that are beneficial to you, as well as those that could definitely hurt your retirement plans and how soon you plan to retire, make you end up having to work a lot longer than you were hoping to. I remember back maybe 15 years ago, having a conversation with an executive director of a nonprofit in Delaware, and doing really well in terms of her organization. But she realistically was preparing to retire, within the next 5 years. And she told me, she said, hey, I wanted to make sure we sat down and talked because, for years, my husband managed our retirement investments and our savings and everything. And 6 months before, say a year ago, the markets took a hit during the credit crisis. And 6 months after that, he passed away. And when she came up for air after the grieving process and just began to take a look at the retirement savings, she realized that collectively had lost over $500,000 in their retirement savings, which they were really preparing to retire together. And she realized at that point that they didn't have as much life insurance, as it wasn't really factoring life insurance as part of their retirement objective. It was, hey, if we pass away, let's make sure we have enough money to bury us, kind of deal. And so the retirement savings was more specific to, what did you save? What did you invest? And how much is available to live on for the rest of your life? And so she, it was one of those moments that really woke me up. I remember that conversation. And she said, so though I don't have the energy to do another 5 years, I have to do another 5 years. Or is there some other way that you can show me how to do this without having to work another 5 years? And at that point, she was into her 70s. And so, these are those type of moments that for me are extremely important, because that was just one person I had a chance to talk to, when there's just scores of folks, thousands of folks who don't have a financial advisor to have these conversations. And trust is a big factor as well. People just have a lack of trust and maybe don't feel comfortable talking about financial related matters, and feel as if, I'm ashamed for what has happened, so I'll just lick my own wounds and try to figure this out. Or, in this new day and age, it wasn't so much the case then, but definitely now, folks can go on to, YouTube and just type in something, and there's a host of people who have an idea around these types of things, but whether they're licensed financial advisors or not, the information and suggestions are out there. But I do think it's important for us to begin to create a resource where folks can have conversations. They have to pay for it, but it's just a way to begin to tell their story about what's happened and how they're planning to hopefully make some changes in that situation. So with that, I think it's also important for us to have our aggressive allocation, our moderate allocation, but also to have a portion of our overall portfolio that is in a fixed or guaranteed investments in that portfolio that is prepared for market swings. The good part about this process is that after you've completed your risk tolerance questionnaire, your investment policy shows you what percentage should be where. So if you're willing to take on more risk, then there's a lower percentage that would be in your guaranteed and your fixed allocation. If you're not so much wanting to take on risk because you're hoping to start taking income, then your fixed or guaranteed allocation would be larger, because you want to make sure that you've protected what you've already accumulated, and not put as much of that money to risk for future gain. So the question is how percentage, what should be in the markets, what percentage should be in more fixed or guaranteed type accounts. And then even in that example, if you are in the fixed or guaranteed market, how do we get to the highest rate of return in the fixed and guaranteed markets? Who's helping you to get to that point and even understand what's out there? What type of account is it? Are you CDs? Are you in life insurance contracts, cash value? Are you in like fixed annuities with accumulation annuities? Are you using bond strategies? Like what's your strategy to at least begin to measure that fixed guaranteed interest rate environment, and which accounts work best for your overall portfolio? And then I think it's also very important as we look at our fourth quadrant here, which is much more around tax savings, liquidity. Whenever we have a tax savings type conversation, I always want to make sure that we talk about charitable giving or gifting strategies that also serve a tax purpose, but it also serves kind of a specific, unique objective for you, that you begin to support causes and organizations that reflect your ideals and the things that matter to you, that you become an active player, that they are built into your portfolio, and not just kind of one-off. I mean, you can have a whole charitable portfolio that once you make the contribution, you receive the tax deduction, whether it's through a public charity or a donor advised fund, or for those of you who may have your own private foundations, or if you're just working directly with a nonprofit 501c3 organization, and that's your go-to. As we were growing up as kids, we spent most of our time at church, and church organizations serving as 501c3 organizations. And, it was interesting. I was talking about this yesterday where, when we were kids, we would go to the church for voice lessons, for training to learn how to play instruments, for tutoring, for public speaking, all these things we were learning. We didn't have to go and hire some, professional in that space. We didn't have the money to hire professionals in that space. We just went to the church, to our church, and everything that we needed, we were able to get those types of services as kids to make sure we're learning how to sing and, play and speak and do all these different things, so much and that I mentioned that because, folks who are active churchgoers are tithing to those churches 10% or more to the churches where they spend time. For those others who just have favorite causes, whether it be, I've worked over the years with nonprofit organizations, and just a wide variety of types of causes and initiatives that are going on, that people are doing great work in those spaces, from hospice organizations, to community action partnerships, to, medical related organizations and social justice organizations, just a host of different groups. And I always look at it, and we talk about this with our Dreammakers Network, it's important to identify the things that make you happy and excited, and the things that piss you off and make you mad and sad. I can tell you there is a nonprofit organization that has dedicated their time and work and experience to each of those or any of those causes, whether it's, saving the trees and you want to make sure you're doing that, or whether it's, funding scholarships for kids who are going to historically Black colleges. Like, there's just a host of different 501c3 organizations that you can identify as yours. Like, this is mine. Like, this is my commitment. I remember, I think it was 2018 or 2019, when Robert Smith of Vista Capital, he showed up to do a commencement speech at Morehouse College. And before he finished his speech, he said, "Hey, listen, this is my class, and my foundation is going to pay off the student loans for this class. And we're going to do this and support this organization, support this college." So you can choose, like, what's it for you? Like, what's the charity for you? What's the one that matters to you because of whatever happened in your life or whatever the situation was? I mean, I've been to galas, just watched, millions of dollars raised right there on the spot because if whether it's a hospice organization and that organization was real time provided quality care for a loved one who was in need and really helped to address support services for folks who are just at the worst time of their life to see a loved one going through situations like that. And so they come to the galas and they support them as much as they can. So making sure that when you're building this portfolio, that you're in a position to personalize the portfolio as close to you as possible. Make it very intimate with the things that matter to you. And whether we're talking about investments and investing in companies that you know and understand, or whether we're talking about charities and supporting the causes that really, matter to you and put you in a position to want to do more. These are things that when we're building out our portfolio from top to bottom, from tax strategy to investment growth to cash flow, and even for those who are kind of nearing retirement and beginning to think about, well, what does retirement actually look like? And I'm like, well, where are your favorite vacation locations? Where do you like to go and play? And let's talk about that. Let's unpack that more. Like, where do you go? Like, and why? Is it water? Is it mountains? Is it rural? Is it, museums? Like, what's going on in your thoughts when you begin to think about the things that bring you life, that bring you joy, that gives you peace, that gives you energy, like that reinvest in you? Where are those places? Is it in the States or is it international? Is it in a library around just scholarly books, or is it out playing in, at Disney World, theme parks? Begin to unpack that. And listen, if these are places that you love and it gives you energy, you may as well own some assets there, right? So why not purchase a vacation rental? Do you have it in your retirement portfolio to purchase a vacation rental? And here's the thing. If other people feel the same way about it that you do, there's probably some great cash flow opportunities there for that vacation rental. And if you own it, there you go. And there are different ways to own vacation rentals. I mean, you can own vacation rentals through a self-directed IRA, or you can invest in them directly from your budget. There's just a host of different ways to approach how you build a very personalized portfolio that matters specifically to you, not someone else who says, I think you should do that, or I think you should do this, but tailor it to the interests and the needs that you can. So it allows you to be a much more hands-on investor and not so passive, which reduces your risk in many ways because now you're involved in the process. The challenge that we have, particularly in investments and in retirement savings, is that we go to someone and we have no clue where to start. And they say, give me your money and we'll take it from here. But we want to make sure that you are tailored this for you, that your investment portfolio, it looks a lot like you, right? It looks a lot like the things that you do, that it makes sense. So then it comes down to, at that point, well, how do we make it grow and be of benefit to your overall savings, to make sure that you're in a position to have double-digit returns, but you're also maximizing your tax strategies and the whole nine. So this is an important approach. And I'll tell you this, as you're building out with the goal of having $1 million retirement portfolio and beyond, it's one thing to say that, and then you finish the meeting with your advisor and say, oh, I hope that guy takes care of me. I hope this lady really got what I was trying to say, and she does this for me. But if you can walk away from a meeting like that, and then you get in your car and you start thinking about, wow, I can actually purchase, a vacation home. I can actually buy stock in a company where I spend, 20% of my income anyway, I can actually support and maybe become a board member of my favorite charities and causes that really matter to me and that we need more support in. I can actually be a big part of all of this, all while watching my portfolio do the things that I hope it does, gives me the type of cash flow and growth that I need that will prepare me for retirement, but at the same time, puts me in a position to really feel like I am actively involved in the process of the growth of that portfolio. And this is just, I think an important conversation that we all need to have. I want to make sure that we begin to have this type of conversation much more often, much more open conversations around these topics specifically. And how does it matter to you? How do we build a diversified portfolio that reflects your wants, your wishes, your thoughts, your ideas, and how can we make it serve the purpose of growth and income, and at the same time further advance the causes and the mission that you have in this life? And so I want to let's take a second, see if anybody have any questions or comments. And as we're looking here on social media for any comments or questions at all, please feel free to go to the Google Meet link, jump on the call if you have any questions or comments. But again, also feel free to go to engage-wealth.com, schedule a one-on-one appointment if you have some ideas, if you just want to pull out your statements and say, Byron, let's go through this together. We can do that, schedule a one-on-one for us to take some time and go through some of these strategies that you have and what you're working on right now. And so, all right. Well, listen, guys, I am really excited about the kickoff of this. Within our Dreammakers Network, we're doing our 90-day goal setting challenge. So the question is, what's in your hand? How do we take what you've currently built, what you currently know and understand, what you currently have, and take it to the next level? Expand and scale what you already created. And this was one of the goals that I had, to begin the process of having conversations with the market, just opening up, talking to folks about topics that folks they think about a lot. We all think about money, but we don't always feel comfortable having the conversation. And so I think for us, and for me personally, to begin to do this more often in unique ways, you'll see, I guess, throughout the rest of this year and beyond, ways that we'll be able to dive in and do this on a much more real-time basis. And so, all right, I see my Tuskegee brother, Joseph Davis. Good to see you, brother. Appreciate you jumping on here. Yes, indeed. Definitely looking forward to finding new ways to build wealth. It's not cookie cutter. You know what I'm saying? Like, there's so many ways to create wealth, but the strategy and the passion we have behind doing it is so important. So it's just important for us to begin to build a plan, especially if we already have the ideas. And if the idea is there, if the commitment and focus is there, now let's just build a strategy to go at it. And sometimes it requires capital. Sometimes it requires investment. So who would invest in your idea and why? And don't let someone tell you that someone won't invest in you. Maybe the bank that you currently bank with may not invest in you, but there's somebody out there who's gone through what you are going through now and are saying to themselves, I'm looking for more me's. I'm looking for people who had an idea, got shut down a couple of times, but they just need a little tweaking of their business plan and their business model to have this thing go to the next level. That's what these type of conversations are about. Because, again, remember, when we're looking at our portfolio and we're cutting it into fours, the aggressive growth portion is you. It's the LLC. It's the business. It's the entrepreneurship ideas. How do you take what you know and understand and make it profitable? Make sure you know who your target market is. Make sure you have just a killer business plan that investors want to be a part of. I can tell you right now, investors are looking for deals. Investors are looking for deals. They're looking for companies that have great ideas, that have great strategy and structure, that have already shown some success, and it's already in flow, cash flow, and they want to be a part of it. And if you can also add in, here's what my end game is, here's what my exit plan is, because a lot of folks don't start businesses to exit. They started to, have forever. Hopefully they hope that their kids are going to take over the business, and then they realize the kids don't want anything to do with it. And so that is one, I shouldn't laugh, but that is a conversation I have far too often, with business owners, and they've built this business and 20, 25 years into it. They're like, yeah, things are going well. We're doing X million, and they're raving success, right? It's like, yeah, but I'm gonna pass this down to Junior. I said, great. Well, let's get Junior in the next meeting. And Junior comes, and I could tell as soon as Junior walks in the room that he wants no parts of this business. Matter of fact, he's interested more in hiring me to be a part of the exit conversation now. He's like, well, how do we get this process started, Dees, on exiting now versus pass this down from me to start to, mimic what my dad did, So this is a real thing, man. I can't sugarcoat it. This is a real thing. This baby boomer, life, owning baby boomer entrepreneurs, pray for them. Pray for all of your baby boomer entrepreneurs, because I'm telling you right now, they think they're passing this business down to the kids, and the kids have a different plan in a lot of cases, right? And so, and even if they do take over the business, it could be the case that business, that kid who's an adult, but their children aren't particularly thinking about passing that business down to their kids. They're looking at passive income. They're like, okay, well, hey, yeah, dad and granddad built something great. How do we create lifetime generational passive income so we can take that income and do other things? Like, they built a great business, but we want to do other things, So, and listen, there's no right or wrong answer in this. But it is important to expose your thoughts. Don't be afraid to talk through what you're really thinking about the pass down of the business, if you will, or what to do with the estate. Someone passes away and what to do with the estate, especially if there's a business involved. What's the objectives? A lot of times folks didn't spell things out in their estate plan, which is another point. Making sure that you have proper estate plan and it's documented in a way, one, it's, set up in a way that's beneficial from a tax perspective, so you're not dealing with a lot of estate tax issues. But more importantly, that the wants and wishes of a business owner who's passed continues on for generations. And you can document those types of things in legacy trusts and dynasty trusts and irrevocable trusts that, own those assets and have its own policy for us to continue to revisit. I mean, we used to, in my old company, we used to have folks come in, and it would be the grandkids or great grandkids of who are beneficiaries of the trust. They've never met, Grandpa, Dan, and great granddad. They never met those folks, but they're now starting their life, and they're getting married, and they're buying a home, and so they're looking to access the trust to figure out, can they get a down payment from the trust to buy a property, or what are the rules and things like that. And so, we didn't talk much about estate planning, but that is a big part, especially if you have multiple assets that are owned by the trust. That is a real important conversation to have. And as it relates to what you have today that should possibly go to the trust to continue to fund generational cash flow that will outlive you. And it's the purpose is to make sure it's available for future generations. And so yeah, we can talk through a lot of this stuff. It's just important. And I think that, for me personally, I want to make sure that we're creating more platforms to have these conversations. And, and it's not just, in our own little private rooms. But now it's time to open up the conversation, and at least, for folks to begin to say, you know what, that idea I had in my mind is actually possible. It's not just something that, sometimes I flirt around in fantasy land, but it's actually possible. And to be able to talk through, here's what happened with this one. Here's what happened with that one. Here's some strategies. Go to this conference, go to that conference, talk to this investor, talk to this banker, talk to this potential procurement manager who's looking for people like yourself to contract with. Like, these are real things that can happen. So don't give up on your ideas, because your ideas can play a huge role in advancing that multi-million-dollar portfolio that we're talking about. There's only so much you can do with your contributions. You get paid a certain amount of money, and you're going to put a percentage of that money toward your 401k and your IRAs and your other investment accounts. And so you're only talking about a portion of your cash flow. But if you're able to take that idea out of your brain and wrap it in an entity and get a contractor to and go at it, now we're changing the game. And you can begin to see your overall cash flow go to a whole new level. You begin to watch your assets and your net worth take on, levels that you never thought was possible, and begin to make partnerships with other folks. And just so it's limitless what can happen. But I want to make sure that we have these type of platforms that specifically talks about money. We don't dive into, we're focused on money and you. And so how to make sure that we're maximizing your goals, your objectives, and tying this into your financial picture, your overall financial objective. And so with that, I think I've chatted on enough for you guys today. And hopefully you've had a chance to eat your lunch and listen to me jab on. But I appreciate the time. I appreciate you guys joining us and watching this throughout this process. And again, feel free to log on. Let's get some time and talk this through. Very excited to begin the process of working with you on your goals, on your money management strategies, on your businesses, and taking this thing to the next level. And so, again, go to the website, www.engage-wealth.com, and go to the Dreammakers Network, dreammakersnetwork.org. We look forward to connecting with you, hearing from you, beginning to work with you. I hope we have a chance to work with you specifically on partnering with some of your deals and just helping you with the building out of your financial objectives. Listen, this is the day-to-day. So I'm excited to be able to partner with you and be a part of that process. So with that, get back to work, stay on top of your goals, and we look forward to seeing you at the next Money Mondays with Engage Wealth. We'll see you soon.